Hi, good afternoon, everyone, and thank you for attending today's webinar, Money Management Support and Financial Wellbeing. We're really lucky that we have Anthony Price from PayPlan here to run this session for us. Anthony will, honestly, the advice and the information that he does pass across over the next 45 minutes or what have you really is amazing, especially at the moment with where we are in the world and the cost of living crisis. We're really pleased to have Anthony here. I'm really thankful that he's agreed to run another session for us. If you have any questions, please ask. And that's what Anthony's here for. He's here to answer any questions that he absolutely can. And if you could save them to the end, you have a questions tab on the side of your panel there. You can pop them in there whilst we're actually running the session, and then at the end we'll read them out. With that being said, thank you, Anthony, and over to you.
Thank you for having me, and big welcome to everybody that's joined us today. And as you were just saying there, it's a really good time to be on a session of this type. A lot of us are feeling the pinch, so to speak, when it comes to money matters, and a lot of that driven by the cost of living crisis. So I'm really hoping that at the end of this session, there'll be something that you've seen that will be helpful for everybody, something in here for everyone to take away. Either on a practical level or just reassurance. That's what we're here to give during this this session. You'll notice that this is called Money Management Support and Financial Wellbeing, and we're going to cover a variety of different topics in this session today. And I'm going to almost break it into two sections. The majority of the section is going to be looking at wider financial wellbeing, but importantly, some of those top ideas, top tips that we can look at to improve our own financial wellbeing and give us some, I guess, more confidence around money matters, which is really important. So we'll be spending quite a bit of time looking at that today. And then also we'll look at some of the preventative work that can be done to stop getting into further financial difficulties, and what professional support's available from organisations like ourselves. So I'll just give you a bit of an introduction to who I am and the organisation that I work for. My name is Anthony Price. I'm one of the partnership managers here at an organisation called PayPlan. And the organisation that I work for, we are a nationwide free debt advice and money advice support service. So we help anybody with any kind of debt support that's needed free of charge. And I'm going to talk about that a bit more later on. But this session isn't all about debt advice at all. In fact, the majority of it is going to be looking at general money matters. So, so we're covering a real range of topics in this session today. I've been in the world of debt advice for the last 18 years, and one thing I can say is that it's an ever interesting sector to work in, because it's an ever changing topic to be around. And certainly everything at the moment seems to be changing, and we're probably all feeling that pressure at the moment when it comes to finances. You may be sat there actually though thinking, I feel very alone in all of this. And you may be thinking, you know, nobody else is probably experiencing what I'm experiencing. So let me reassure you by just setting the scene a little bit, first of all. And first of all, by saying that actually over 20 million of us struggle to manage our money at any given moment. A lot of us, that is struggling day to day. A lot of us also have a lack of or low levels of what we call financial resilience. So savings, a buffer, in case things might get tough or things go wrong, and that again can cause additional pressures. And actually nearly 9 million of us are in some serious form of debt problem. So when it comes to money matters, let me start by saying, as you can see here, nobody is alone. And actually, you know, at some point during our lives, we will probably all, you know, struggle with money and finances at some point and to various degrees. I think one thing that the cost of living crisis is doing right now is it is touching every single one of us to various levels as well. Now, this information that you're going to get today, it might not even be for you where that comes in and is useful. It might be information that you can take away and give to somebody else. So whether that's a friend, a colleague, whether it's a loved one, a partner, whether it's a child of yours, an adult child, anything, you know, anything that you've seen here can be passed to other people as well. So why do we sometimes feel alone with money matters? Why is it such an isolating topic? Well, actually, it's because there's lots of reasons why we create barriers, why there's barriers that stop us from talking about money matters. And actually, these are just some of the top 5 reasons why some of us won't speak about money and why that can cause for further well-being issues and financial difficulties. First of all, sometimes we just find it too embarrassing to talk about money matters. Whether that is just the embarrassment of the money matter itself, or maybe the embarrassment of just talking about that to somebody that we already know. For some of us, we might feel ashamed of money matters. For some of us, we may feel there's a stigma associated to that. For a lot of us as well, it's that we just don't simply want to put that on somebody else. We don't want to burden them with their own problems. But actually, I think most of us would find that if we did start to speak to somebody, they'd be really wanting to help us, if it's someone that cares about us. I know if somebody came to me and said, I've been struggling with this a long time, but can I talk to you about it? I would be absolutely wanting to help them and be thinking, I wish you'd come to me sooner. I'm here to help. This is the big problem, actually, about the way that we're brought up, either in society or within our own household. A lot of us are brought up to be told we don't talk about such things like money in society to other people, but also education as well. It's a shock, really, that we are in 2022 and we are only really starting to see financial education being brought into schooling age. It is something that all of us should be educated on at a young age and upwards. There shouldn't be any time when that doesn't stop, really. For some, it can cause stress and anxiety, but actually that can be a bit of a vicious circle, because not talking about money matters can cause further stress and further anxiety, and the wheel can go round and round. And so actually it's better to talk about it and to get some help, because that can help you break free of that thought. And also thinking that we are more successful than perhaps, or should be more successful than we are. Some of us can do that just because we're working professionals, or the industry we work in, or what's, certain status. And sometimes we can put far too much pressure on ourselves, just thinking this shouldn't be happening to me. I therefore can't speak to anybody about it. And like I said earlier, any single one of us at any point can have financial worries. And that's because a lot of the problems, just like what we're experiencing right now, are things that are beyond our control. Energy prices going up, all these different things that we are seeing changing. They're not things that we can necessarily change and impact in terms of external factors. And so lots of these different reasons that you can see here preventing us from having discussions. But one thing I really want us to do today is to kind of make a change into, even if we just speak to one other person and say, things are getting tough at the minute, aren't they? That can just be enough for someone to talk about things and to get some help. So let's get talking is really what I'm saying. And actually not talking is quite a big problem. This just comes from a piece of research that we did with people that came to us as a service for debt advice. And what you can see here is that the majority of people actually struggle with finances for far longer than they actually need to. In fact, you can see here well over 80% of people actually, and alarmingly over 21% struggling for over 4 years. And what I can absolutely say is that we know that the longer that someone struggles, the more stressful that becomes, the more that impacts the wider well-being. It also can escalate the problem. It means it's more difficult and challenging to deal with. And what we would want to do is try to reassure people to come and get advice and support as soon as that's needed. Another reason why a lot of us don't talk about money matters and borrowing and finance is because some of the word and the language used these days has almost become very negative. And I'm going to use an example here. You can see the word debt written on this particular slide. Debt has almost become a very negative word. If I asked 100 people, what does the word debt mean to you? I think the majority of people would actually say, oh, that's when you're in trouble, or that's when you can't afford to pay your debt back. That's when you're in financial difficulties. That's a bad problem to have. But actually, debt just means it's money I've borrowed. You might be paying that very comfortably every month. That might not be a problem at all. And there is a big difference between manageable debt and then unmanageable debt. And sometimes it can just be the slightest thing that changes that. It can take you from having manageable debt to unmanageable debt. And it's about recognizing when that happens. And we'll be talking in more depth today about some of the indicators of that. How might we recognize that things are getting difficult or we might need some help? And actually, we all have debt at times in our lives, whether that's a mortgage, a mobile phone contract, council tax, because we get billed that at the beginning of every financial year, and then we have to pay back in installments. Most of us don't have the money to pay that off in full. Whether it's car finance, credit cards, furniture, lots of different types, but it just means I've borrowed. You know, I'm very happy in one respect to have a debt, because if I didn't have a mortgage, I wouldn't have been able to buy my house. There's a difference, like I say, between manageable and unmanageable debt. And so let's not think that that's a negative word anymore. You know, we can all educate other people and help with that. And I think that will help us to start the conversation about money matters even further. So let's talk about the here and now. What are we all feeling and seeing at the moment? I think I could sit here actually and talk for the next day. You know, if people would have me, I could talk about the cost of living crisis and the impact that that's having on all of our day-to-day living costs. But actually, this image that's on this screen right now probably does that far better than me talking about it for that amount of time. It shows the many and various different expenses and living costs that we're probably starting to struggle with, or that we're recognizing are increasing, and we can see that things are going to be maybe becoming more challenging on the horizon. And actually what you'll notice is that all these things that are around this circle, this I can't afford perhaps X, Y, and Z that you can see around here, these are all just general living costs. There's nothing extravagant in here. These are just general living costs that some of us will be feeling are rising and we're having difficulty with. So let's have a look at a couple of these just to bring in some examples. Gas and electric, you know, again, this month in particular is a key month because a lot of us will be seeing those energy prices increase. And yes, we've got some support from the government, but we know that's over a short period of time at the minute, and we need to look at how this impacts. Yes, we've got the cap that's been brought in, but it's still going to see those increases. So gas and electric, we've got on there things like mortgage rates, they're going up at the moment. Rent might be going up for a lot of people. We know that filling up the vehicles that we own are going up. I was on the road only last week and I was driving around, I was driving up on the way to Scotland, and I pulled in to go and get some fuel, and it was £2.01 to fill up per litre on that particular petrol station. Whereas, you know, we wouldn't have seen that a few months back. And then, of course, things like shopping, food. Again, we're all seeing that. It only seems like a couple of weeks ago, really, when I saw, you know, I go to the local supermarket and I think, oh, there's a couple of things there that I've noticed are going up. One of the first things, I think this was in the press a lot, was things like Heinz tomato ketchup and things like that, that were really going up. And now I'm going into supermarkets like I did this weekend and thinking, okay, pretty much everything's gone up. And so that is building. And actually, if one of these items around this circle, if it was just one item that went up for each of us, maybe that's something that we could perhaps, I'm not saying always, but perhaps deal with, or perhaps absorb or balance, you know, and cut back in other areas. But when several of these things have been increasing, as they have been, most of us, it's at least a number of these things. I mean, for just those 4 things that I've named, you know, probably all of us have got impacts of that. The majority of us have anyway. But when several of these things come together, that might be when we need to take some help, take some action, get some help. So what I'm going to share with you over the next couple of slides are almost the top tips that we can recommend that might give us some focus to help us to look at boosting our income, ways to cut our expenses, and what we can do to give us some confidence around money management as well, because that's really key. The more confident we are about it, the more, you know, that'll give us in terms of well-being and feeling like we've got things under control. So let's start to think about what we can do. Now, before we start to look at those top 10 tips, I'm just going to set the scene by saying there's nothing wrong with taking one step at a time with this. Yes, I'm going to show you a series of tips. We might have some people on here that think, great, I'm going to give all of those things a go. I'm going to look at all of those. That's fantastic. I wouldn't tell anybody to not do that. That's great. But don't feel that you need to take a running jump at everything at once and try and do everything in one go, because actually sometimes that can be overwhelming and counterproductive. So I would say it's better to just do one thing at a time and do it well. That's what I would say. Learn from it and grow from it. So just do one thing at a time, perhaps move on, do the next thing, and move on and do the next thing. Nothing wrong with that whatsoever. So let's have a look to see what some of these top 10 tips are to financial well-being and what we can do to try and give us a bit more confidence. And some of the things that I'm going to share with you on here are deliberately quite simple. I think actually some of the simple things are where we get the best results in life. And actually we want these to be things that you can go and do and get some practical support. So certainly some of these things are relatively simple, but actually it's a combination of these things coming together that we can build on and over time that can really make some huge benefits. So top tip number 1, this is all about confidence, and knowledge is power, as they say. So this is all about understanding your finances, looking at your household and understanding how your household budget and finances work. Now there are different ways to do this, and I think this is all about finding a way that works for you. Now, it might be that you're somebody who likes to get back to basics and just get pen and paper out and start jotting down all of your household incomings and all of those household outgoings. However, you might be somebody who prefers to have something as a guide. So maybe there's a budget planner that you can use, and we'll be sharing one of those with you at the end of the session. We'll be circulating an example of that, one of our budget planners that gives you a nice and easy reference guide, and you can fill that in. It might be that you're a whiz kid on a spreadsheet and you prefer that. And again, we're going to share with you a version on a spreadsheet as well. And the good thing with that is if you like spreadsheets, that can calculate things for you and add things together. So it can do some of the work for you basically. Or it might be that you like an online app or an online tool that you can access and do it that way. There is absolutely no right or wrong answer with this. It's about finding a way that works for you. And maybe you're doing this for the very first time. Find one that you want to give a go. If that doesn't work for you, do not let that put you off. Maybe it's just that way isn't for you. You can look at another example and try something different. So don't let that put you off. Now, actually, when we speak to people that come to us for debt help for the very first time, like I say, we speak to a lot of people every single week that come to us, thousands of people every week. Quite often, the majority of those individuals haven't gone through and put pen to paper or done a budget for the household. They haven't looked at their finances in that way. And most people, when we go through and support them with that, talk about the fact that that made them feel a lot better because they can see clearly what their household finances look like. They feel more confident with it, but also they can understand where they can make changes to their finances for the better. So this is all about confidence and being able to make changes. So if this isn't something that you currently do, even if you just start off by doing it once a year, that is a great start. It will get you in that habit of reviewing them every year. Maybe you want to then start, over time doing that every 6 months and then building it on from there, doing it once a quarter. Brilliant, that's really good. There's never been a better time to do this actually, because a lot of us might need to get control over what our household finances look like. So how do we do that? Well, first of all, it's about looking at what is coming into the household, because then we can understand if there's any missing gaps of income as well. And we'll talk a little bit about that in a moment. But in terms of getting your list of incomings coming in, get a list going, think about what you're earning from employment, any types of benefit income, pension income, and any other form of income that's coming into the household that needs to be listed. Also recognizing that you might get different forms of income paid at different times of the month. Some income you might get paid calendar monthly, some it might be weekly, some it might be fortnightly, some it might be weekly. What you want to do is calculate that all to be on the same basis. So if, it might be that you want to calculate it to every income type to be worked out monthly. We'll send you a guide on how to do that as well. So we'll send you a really easy guide on how you can calculate each form of income in the same way. So we'll send that to you as well. What you also want to be doing is looking at all of your outgoings as well, of course, and understanding exactly where your money's going. Because again, once you've done that, that can really help you to identify where there might be income that's going on things you don't need anymore. It might be that what we call a leaky bucket, and it might be there's income that's like seeping away without you knowing about it, and you can help plug those gaps as well. One of the things I can say is that I gave you a few examples earlier of how you might do a budget. Might be that you do pen and paper, might be that you use some tools. One benefit of using the tools over just simply getting pen and paper going on a list is that it gives you prompts. Now, if you just do, if you've got pen out and start jotting your income out and your outgoings, you'll only remember what you remember. You'll only actually list down those things that you recall and are going out and that you remember to list. The great thing about using a budget planner and a tool like the ones that we're going to send you afterwards is that those can be used to prompt you to remember things that you would have typically forgotten. So I'll give a few examples here. We'll probably all remember to list out things that we've got coming out every single month, probably even more so if it's direct debit or standing order. We can get a bank statement out and we can list all of those things because we can see them there. But what about things that might not come out every single month? What about things that don't come out by direct debit or standing order? Maybe you'll need something to prompt you, and that's where a budget planner that says, remember, what about these? Do you spend on this? Do you spend on this? That can really help. It might be that you've got costs going out every 6 months or every year. So classic examples might be things like road tax. It might be things like car maintenance costs for servicing, could be MOT, it could be things like if you've got a boiler cover, you've got servicing on that. There might be things like that you pay for yearly. Well, we'll still need to budget for those throughout the year so that we've got the pot of money to one side to pay for those things when the bill comes in. So it's important that we list all those things and then spread those over the year and put those into our monthly budget planner. So that would be one of the things to remember, not just the things that come out every month, every single month, but what things come out and we need to spread across the year and budget for. It might also be that we've got costs that are going out that are just those kind of incidentals or things that just are living costs that just happen when we might be traveling or out and about. So an example here might be when we're speaking to a client of ours and we're going through a budget and we go through certain costs, one of the things we often ask are, is there anything that you do on your way to work? Do you pop out and get lunch? Do you grab a coffee on the way into work? Maybe you pop into Costa, Starbucks. Do you ever do that? And sometimes they'll be, oh yeah, I do spend for that. I get a coffee 2 times a week when I'm going into work. Well, that could be £3.50 a coffee. Sometimes that's £7 a week. Look at that over a month. That could be a big chunk of money. And that will really help because that'll make you, allow you to understand whether that's something you want to keep covering and keep paying for, and you're happy with that and you can afford that. It might be that you think, actually, I haven't been factoring that in. That's getting a little bit out of control. I'm going to cut that back and I'm going to halve the cost. And then take a thermos in for the rest of the week. Or actually, just right now, I can't afford that at all. I'm going to stop paying for that. That's going to save me £7 a week. That's great. Those kind of things that just get you remembering. That's why a budget planner is really, really useful. And also to make sure you've got things in there that you need that sometimes people think, should I have that in my budget? Shouldn't I? A classic we find is things like hairdressing. Absolutely, we need to get those things in that budget. Those are going to be paid for. We need to get those in. So all of those things, prescription costs, it'll help you to understand then what's available to you. A great one there is if I'm paying for multiple costs on prescriptions, it might be that it'll be better for us to go onto a prepaid prescription card and look at getting a discount from doing that. So just think about listing absolutely everything that you've got. You'll then be able to understand where you can make those adjustments. Where can I cut back if I need to or want to? Where is my money going? Am I happy with that? And you can go from there. Several of the things that we're going to talk about through these top tips actually feed in nicely to doing step 1 first. So I would say that's one of the best things to start with, because that will then allow you to look at all these other things later on. The next thing on the list is very much linked to knowing your finances, but it's actually when you know your finances, and let's say that you decide that you do want to make adjustments to your spending, do make sure that you're getting the balance right. And for me, this is all about well-being. It might be that you're thinking, yeah, I've been spending on this, this, and this, and this, and I've forgotten about all of those expenses, or if that's gotten a bit out of control, I'm going to start cutting those back. That's really great. That's really encouraged, to start making those adjustments. But also make sure that you've got in your budget things that help you to live a decent life, and not cutting back on every little joy in life. Because if you cut back on everything, it's going to make it really unpleasant, and it's going to make it quite difficult to manage day to day. And I always think this is like being on a diet. If you're on a diet and you cut out every little pleasure in life, you're probably going to get some really good quick results. The weight will drop off, you know, that will be really quick, and you'll get some good results that you can deal with to start with. But maintaining that kind of lifestyle and that diet over a long period of time is going to be probably unachievable, because there's no pleasures left. You've got to build in those things and have a sustainable lifestyle. And that's the same with financial well-being as well. Really important that it's not so cut back that we're getting the balance wrong and it's not achievable. Next thing on the list is about credit reports. Now, a lot of people hear credit reports and assume that this is just about credit scores. And it is about credit scores, but that's only part of it. So I'm just going to tap into this a little bit and make sure that everybody's thinking about credit reporting and what's available to us on those. So the first thing to say is that credit reports contain a lot of information about us individually. And that information is what's used by banks and other lenders to make decisions on whether they will give us the financial products that we might be after, but also what kind of interest rates as well, whether that's a mortgage, whether it's car finance, whether it's credit cards, loans, catalogs, whatever it might be. Those decisions are made based on the information that's held about me. Now, one thing I would absolutely encourage is that you get familiar with your credit reports, because it's your information. You want to know what's on there, because first of all, if it's not quite where you want it to be, you'll want to know how to improve it. You can only improve it by knowing what's on there. Likewise, if there's something that shouldn't be on there, if there was an error of some sort, again, you want to know what's on there and how you can update that error as well. So let's have a think about what's on here and what we can utilize credit reporting for. First thing to know is that there's three main credit reference agencies. So credit reference agencies are organizations that hold credit reference information. So three of those. The three companies are Experian, Equifax, and TransUnion. And what I would recommend is to actually look at getting your credit report from all three of those. And the reason why I say all three is because each one holds slightly different information. They work slightly differently. And actually, if you get across the board, that will really help you, because you're covering every bit thing. You're covering all bases. The other thing as well is that all of those will have free information that you can get access to. So you can send off for information in the post, but also what's available, there are apps available for you to download and get lots of information immediately and free of charge. Now, I use all three apps, and they're called something slightly different for each provider. Two of the top ones, so you can have a look in your own time and have a look at these. But for example, ClearScore, Credit Karma, they're a free app. They hold that kind of information. And when you log into there is lots and lots of information on there, including your credit score, but lots of information beyond that. So what can you see? So first of all, yes, you'll see a credit score. Each company gives you a score in a slightly different way. So for example, ClearScore, they give you a score out of 1,000. The higher you are on that number, the better and healthier your credit score is, the more likely you'll be approved for any kind of credit that you need, and the better interest rates that you'll be able to get as well. The lower the score, the more difficult that gets, and the lower chance of being approved for credit, and the higher interest rates that you'll typically have to pay for. So what your aim is to get those numbers as high as it can be. Each provider, each credit reference agency has a slightly different way that they mark their numbers. So, but we'll use ClearScore as an example. They use 1,000, score out of 1,000. Now, one thing that they'll tell you as well on those apps is what you're doing well in. So if this is doing well, you're doing well in this area, keep this up, because this is giving you good impact on your credit status. But what they also tell you is these are where your areas of improvement are. This is what can really help you to boost your credit status. And that might be things like, if you're not on the electoral roll, getting on the electoral roll boosts your credit score significantly. And in fact, it's the biggest area for tending to be where you can get a boost. And actually, you normally get a good couple of 100 points for just being on the on the electoral roll. So if you're not on the electoral roll, really good reason to be on there, even if it's just for selfish points of view and getting your best score that you can do. Also, making sure, of course, that you're paying your bills on time. Of course, if you're paying your bills on time, that will show that you've got you can afford what you've got, and that helps to keep your credit status up as well. And then also things like only using a certain percentage of your overall credit limits. So an example here is, typically speaking, if you've got a credit card, you get a better credit score if you're within about 30% of your credit limit. So if your credit limit is £1,000 and typically month to month, it's within that £300 mark that you tend to use each month, that will give you a better credit score. If you're using the full £1,000 every month, that slightly will decrease your credit score. And the reason for that is because it looks like you're more dependent on it than if you're only using 30%. So knowing that can really help you as well. So there's lots of other things that you can look at, but it will give you those indicators. And that's where you can say, okay, that's how I'm going to make it better. That's how I'm going to improve it. So that's the first thing to talk to you about. The next thing to talk to you about is that it will also tell you how to make better borrowing decisions. Now, I'm not sitting here to tell everybody to go and borrow. That's not what I'm telling you to do. But inevitably, during our lifetimes, we will all have to borrow in some way or another, most of us, in fact. So whether it's a mortgage, whether it's car finance, whether it is credit cards, loans, store cards, whatever it might be. Now, if you go and apply for credit, every time you do that, that impacts your credit score. And it will put what's called a hard search, a hard footprint on your credit score. And that will deduct a certain amount of points every time you make an application for credit. So ideally, to keep and retain the most numbers on your credit score, you want to apply for credit once and for them to say yes when you make that application. What you don't want to do is apply once and then for them to say no, and you have to go somewhere else and they say no. And I'm going to use you an example here of where you can use your credit file to make those educated decisions. So I recently had to get a new car, and I had to get I need to get finance to be able to do that. And I decided to go for an unsecured loan. Rather than going for a hire purchase, I wanted to get a loan to do that. So I owned the car outright from day one. And I had two options available to me. Option one was that I could go to any bank or any lender and apply with them for that loan, hoping, praying that they would say yes, and also hoping and praying that I'd get the best interest rate available. Of course, that is pot luck. I could have applied for that and they say no. The problem is, if they say no, I still need my car. So I then have to go to another lender. I apply to them. What if they then say no? I then have to go to a third lender and apply to them. And every time that I do that, that starts to deplete my credit score. I didn't do that because that's quite risky. So what I did was I used the information on my credit report to do that in a better way. So the other thing you can use credit report for is making those decisions. If you log on to one of those apps, they'll also tell you, do you need to, it has a section on there saying, do you need to borrow? If the answer is yes, it'll say, what do you need to borrow? And let's say I was looking for a loan. What it will do is, based on all the information it knows about me, it will tell me in ranking order, these are the different lenders available to you. This is the order in which they're more likely to let you have a loan with them. So, for example, it might say a particular bank will lend to me at the top, and they're 90% likely to say yes, based on the information the credit reference agency know about me. As it goes down, that percentage decreases to the bottom one, where it might say these ones are only 10% likely to say yes, and in fact these other ones are 0. Sometimes right at the top as well, they have pre-approved offers. So it might say these are guaranteed to say yes to you, which is very useful. And what it meant, and this is what I did, it meant that I went one from right up the top, where I know that that's more suited, they're more likely to say yes based on what they know about me. And when I do that, that means I get a yes the first time round, or certainly more likely to, than taking pot luck. So it's really important that you can use your credit status, credit information to make those right decisions, whether that's a mortgage, car, or any other type. The other thing as well is that it can also give you guidance on how secure your data is. So we all use passwords online, and what a lot of those apps do is they can tell you how secure those passwords are that you use online day to day. And what they do is they give you a score in terms of your security and safety. So out of, again, 1,000, it can say you are at this number, you need to do something better. You might need to think about changing your passwords. They're not secure as you might think. You're using weak passwords. They can detect whether they've been leaked online. They also can prompt you to tell you when there's been a data breach, all sorts of things. Lots of information on there. It's much, much more than just a credit score. So my top tip there would be get to know what's on your credit report and start using it and start to know how you can improve it if you need to improve it, or using it to get the best results out of what you are looking for. Next thing is, again, quite simple, but this is all about reminders and I guess being honest with yourself, like I am. I often will forget to renew certain things like insurances and get best deals if I don't set up a reminder. So I have a reminder on my phone that tells me a month before my insurance renewal's due, go and get a renewal and do that now because it's up for renewal in this moment. It might be that you have a calendar on the wall and that's fine, whatever works for you, but if you need a prompt, use a prompt. This is really important because, of course, these insurance companies, whether it's car insurance, home insurance, life insurance, or any other type, they make their money off repeated custom. And of course, if people just stay with them and it automatically renews every year, you can bet your bottom dollar that every year it's going to go up because that's how they get these increased volumes of money in. So the thing I would say here is set up a reminder, do a shop around, use things like comparison websites and get the best deals. Make sure that you are saving money. Don't let them make a fortune out of you just because you think it's too much work. It doesn't take long to use a method of shopping around and just checking out what's there. Get the best deals. Having said that, you might be somebody who's incredibly brand loyal. Maybe you like the ethics of the business that you are with. Maybe you like what they offer you as a product. Maybe you love their customer service. So this might be your car insurance, for example. Could be any other type as well. That's fine. Just make sure that you are getting the best deals from them if you're going to stick with them. I'll use another example here. My dad, he has for a long, long time, he's been with Virgin Media and he uses Virgin Media for home TV, home internet and telephone. And every year he's been getting very fed up with me because I bug him and say, every year, Dad, your payment goes up because you're a classic, brilliant customer of theirs who doesn't shop around and they're just charging you every year by you staying with them. I said, you need to ring them to go and negotiate and get the best deal. And eventually he got fed up with me doing that and bugging him and he went off and rang them. And she said, yes, absolutely, we can see you've been with us for years. You're a really loyal customer. Let's see what we can do and give you a better package. And lo and behold, gave him a better package and immediately, ongoing, that was going to save him £35 a month. And that's lots of money. £35 a month is a lot of shopping in a supermarket. And if you look at that over the year, builds up. She gave him a parting gift after their conversation. And she said, now, you've done this once. You need to remember to come and do this every year with us because we will not come to you. It will automatically renew and you'll just get put onto another package. You need to come to us and ask for the best deal and do this every year. And he's now in that habit. He's comfortable to go and do that. He thought it was going to be really long-winded. It wasn't. It just took him to make the effort to go and save £35 a month. And if you can do that on that and then do a bit on your car and a bit on this and this and this, it all adds up. So well worth the time doing it. The other thing as well is that sometimes you have to put your foot down. Sometimes you might have to say, if they say, oh, we can't reduce your package, you might say, well, then I'm going to leave you as I'm not going to be a customer anymore. I'm going to leave you. And lo and behold, quite often your call is escalated to a magical cancellation team who will do anything they can to keep you as a customer. That has happened to me a number of times where I put my foot down and lo and behold, they say, oh, let me just see if there's anything else we can do. I'm going to put you through to a manager. And it's not a manager, it's just another team that deal with cancellations that try and keep people. So sometimes think about that as well. Do you need to put your foot down? In a similar way, it might be that you're on a 0% or a promotional low interest rate credit card. Is that coming to an end in the near future where you'll go off the 0% interest rate and you're going to be started charging their standard interest rate? and that means that your minimum payments might go up, or indeed it means it's going to take longer to pay that debt back because you are paying interest. Set a reminder, get into the habit of making sure that you're looking at best deals. You might be able to do a balance transfer. This is where you can use what's on your credit report to look at that. One of the other things on credit reports is that it'll tell you who those 0% deals are with, who those low interest promotional rates credit cards are with, and you can look at doing a balance transfer. So think about that as well. I will caveat that by just saying there is sometimes what's called a balance transfer switch payment, so there might be a fee to do that, but it's normally quite low. You just need to balance whether that's better to pay that fee and transfer it to 0%, which generally it is, normally saving a fortune. Sounds quite similar, I guess, to the insurances side, but making sure that you're checking on subscriptions as well. I would like to think that probably, if I guessed, I'd hope I'd be right by saying that the majority of us probably took out at least one new subscription during COVID lockdown. Whether that was a TV package such as Netflix, Prime, Now TV, or whether a lot of us probably had to take out Disney Plus to keep the kiddies happy, whether it was something like food or drink, whether it was a subscription for music or anything else, you know, crafts and art, for example. A lot of us took those out because there was nothing else to do. Are you still paying for something that you don't now use, or are you not using it as much as you once were and you could reduce it down? This might not be about cancelling it altogether. It might be reducing the package down. Do you want to do it quarterly instead of monthly? Do you know, is there various levels of packaging, you just lower them? A really good time to do it. Now the world has opened back up again and we're socializing in different ways. This might be something where you can quickly cancel, because generally speaking, you can cancel immediately because they're a month-by-month subscription, not a year contract. So you can normally cancel and free up some money really quickly. So if things are getting tight and you need to look at how you do free up money, that might be the way to do it. The other thing as well with looking at cancellations and switching and things like that, it might be an option for thinking about TV package in a different way. I did this recently. I've been with Sky for a long, long time. I've been paying Sky a lot of my money for TV, and eventually I thought this is costing a fortune. And also, how many of these hundreds of channels am I actually listening to and watching every week? Not that many. So I decided to cancel Sky, and instead I bought a free set box. And really easy if you've got a Sky dish. You where your cable goes into your normal Sky box, you just plug it into the free set box, and it works in exactly the same way, but you're just then getting free set channels. That can save a lot of money. Yes, you need to buy the box out to start with, but actually the channels, you get hundreds still. Do I miss Sky for doing that? Generally speaking, no. I get a lot of what I need anyway through free set. On the odd occasion where I think, I would have liked to have watched that movie, all I do is I just get a 1 month subscription to Now TV, and that gives you the Sky channels in terms of movie channels anyway. So I can do that as and when rather than having it every single month. So lots of different things you can do. Next thing on the list is recognizing signs. Sometimes we need to be thinking about those indicators when it's getting tough, when we might need to do something. For example, are you starting to use credit to pay for all of your general living costs? And that's become a regular routine. Maybe you're using credit to pay for credit. Maybe you're only ever paying minimum payments and the debts aren't coming down. Maybe you're using or have used all of your savings up and you're using that to pay for your essential costs. Maybe you're seeing it from more of a physical health aspect. You know, we're talking about wider financial well-being here. That includes health and well-being. You know, are you sleeping poorly? Are you not sleeping at night at all? Are you finding that you're more anxious, stressed? Maybe that's having an impact to things like relationships. Are there indicators there that you might need to get some help? And if that's the case, know that help is there. And we'll talk a little bit about what help is there in a few moments. One of the other indicators could be that you've stopped opening your mail. That might be because you are just fearful of what's going to be in there. It's maybe you're scared of what's in those envelopes. This is an absolute one to keep an eye on. In fact, most people we speak to will say to us at some point they've stopped opening their mail, but they'll also say, I wish I hadn't have done that because it made the fear of the unknown even worse. And actually, they'll often say, I felt there it was hard because I wasn't in control anymore. So I would always encourage to open your mail. And that's whether things are difficult or not, because actually it helps you to keep things under control. I'm always telling my partner off for this. My partner's terrible for opening mail, and sometimes you miss out on all the good things as well. You know, offers that come through. It's important to stay on top of all of that. So we've talked about ways to reduce income, or reduce outgoing, should I say, quite a bit here. But what about boosting your income and doing that instead? Lots of things that you can do here. I'm going to talk about a number of these. Again, everybody's different. This won't be a one-size-fits-all approach. So not everything that I'm going to talk about will be suitable for everybody. But first thing on the list would be, what about tax code? Are you on the right tax code? This doesn't have to be you. Let me just remind you again. These top tips could be you, but it could be a friend, a family member, a loved one, children, partner, whatever, you know, whoever that might be. There might be something here to talk to them about. So are they on the right tax code? Lots of people think they are, but they're not. But where do I go to check that? Well, gov.uk, they've got, if you put tax code in, checking tax code, they have a section on there where you can do checks and make sure that you're on the right tax code, you're getting the full income that you should be getting. Second thing on the list is, are you getting the right level of benefit entitlement? Now, the thing I would say here is, just because you're getting benefits, do not assume that you're getting everything you're entitled to, because quite often you may not be. Again, it might be tricky to know where you should go for that information. So gov.uk do have a benefit check calculator, but we have one as well at PayPlan. I will circulate that so that that comes through to you. It's free of charge to use. And actually, this is why it's good doing your budget, first of all, because having your list of your incomings and outgoings will help with filling that benefit check calculator out. A lot of what you'll need will be from that. And it just asks you for basic details about your finances, but also your household makeup. And it will then tell you what your benefit entitlement is based on what you've told it. That does take a few minutes, but not hours and hours. It just takes a few minutes. But the benefit of that is either it can confirm that what you're getting is right, but importantly, if you've got something that's not coming in, how to claim for it and get that benefit. We do this with clients that come to us for debt help, and we will check their benefits. We can do this. And it's surprising how many people are really shocked to find out they could have had a benefit for a long time and they weren't getting it. A lot of them will say, I assumed because I was getting other benefits, all of those checks were done anyway for me. I thought that the government would have told me that I was entitled to this other benefit. Do not believe that. You sometimes just need to do those checks, but there's tools out there that can really help you to do it. We're sometimes unearthing £600+ a month for people in benefits just from doing those checks. I saw one the other day, and it was about £550 of extra income that we found for somebody just by spending 5 minutes doing a benefit check. So well worth it. For other people, again, this won't be suitable for everybody, but you could consider something like the rent-a-room scheme. Again, like I said, this won't be right for everybody. First of all, you need to be a homeowner. It won't work if you're a tenant. And it won't be right for everybody because of their what's going on in their home. You know, if people have got children, they probably won't want to do this. But for some, it can be really, really useful. And for some, it can be some company as well, if they want it, as well as some income. So what is rent-a-room scheme? Well, rent-a-room scheme is a government initiative. It is a scheme where if you've got a room that's empty and you want to rent that out, you can earn you can earn any amount of income by doing that. But there's a key number. You can earn up to £7,500 tax-free if you stay within that limit. So you can earn any amount, but up to £7,500 tax-free. The other thing as well is that you might be sat there thinking, what's that a month? That is a lot of money. It's £625 a month from renting a room out if you want to do that. On top of that, you might be sat there thinking, sounds great, but sounds like a bit of faff. Sounds like that self-employment. I don't want to get into the world of doing tax returns. I understand, I get that. Good news is that you don't have to as long as you stay under the £7,500 limit. The government website clearly says up to £7,500, not only tax-free, but no need to do a tax return. So it's really simple. I did that recently, a few years ago, it was pre-COVID, One of my friends was living about 200 miles away from me, used to commute into my local area for work and would stay 3 nights a week in a hotel. And he was talking about how lonely he was finding that. And I said, well, you know, instead of paying for a hotel, if you want to pay and do rent a room scheme through me, and you've got company, you're more than welcome to do that. For me, it was a bit of extra money. It didn't impact on my weekend because it was just in the week. For him, it was company, and you know, he was already paying for a hotel anyway. So beneficial to both, and so it can top your income up. Other things to consider as well: are you earning money, you know, from doing things that you would normally do anyway? What I'm talking about here is things like cashback apps. There is a lot of money to be made by just using a cashback app to buy things that you would ordinarily buy. So you've got a few examples here: Quidco, Top Cashback. There's a couple for you. You do a quick registration and then you go and use those to make purchases. So for example, if I'm booking a train, instead of going to Trainline to do it, I go to Quidco and then use that to go via Quidco to Trainline, and it tracks that and then gives me cashback. I can do that for hotel bookings. I can do it if I'm buying online electronics, you know, from places like Currys. Lots of different places, and some people can earn hundreds of pounds just by doing that. I've had Quidco myself. I've had that for probably the last 3 years, and I've already earned over £650 in cashback just from buying things I was already going to buy. So you know, I might still have some extra money in my pocket. Using things like comparison websites, if you use certain ones, you can get things like Meerkats movies through that give you 2 for 1 on cinema tickets. Money off on meals. I went to Prezzo the other week. There was a group of us, and the Meerkat meals, so to speak, as it's called, through that gave me 50% off the bill. That's a huge saving. So using things like that to give you that money back. And then also finding ways that work for you when it comes to budgeting. We've talked a bit about creating a household budget. But how do I then make sure that I've got money aside for those things that I need to pay for throughout the month? So for me, I use online facilities. Now, not everybody's, you know, that way inclined, but I'll talk through a few options here. I like an online tool. I use Monzo. There are other products available. You don't have to use Monzo, but I use Monzo. First of all, it's free, great. Also, I can have my income paid into there, and I set up what's called jam jar accounts. And I can label those for whatever I want. So they're online pots. So I have one for travel. I have for things like fuel and car costs. I have one for housekeeping, for shopping. I have one for utilities. And every month when I get paid, I put the money I need into each of those pots for those costs so that I don't spend it. I know that's there for later in the month when that money comes out. And it just helps me to budget in the way that I need to budget. The other thing I love about that app and that facility is at the end of each month, it tells me where I'm spending my money, because it tracks what you're spending on. So it'll say, you're spending this percentage of your income on shopping, on entertainment. It knows what you're spending money on and can really help you to understand where your money's going. And it also pings up to say things like, it looks like this month you've spent more in this area. So it can be really, really useful. It might be that you prefer more traditional approaches. My mum, for example, I grew up in a household where I used to see her have envelopes, and on those envelopes she would write things like housekeeping. She would have on there petrol money, and she would put physical money in there, and that would help her to budget. Now, I will put a warning flag on there. Doing that in physical money sense, there is an obvious safety aspect to that. Every time you're handling cash, it's not necessarily as safe. But it really helped her to budget. That's the way a lot of people still budget today. And I know I use my online pots as a complete alternative to what she used to do, but it works pretty much in exactly the same way, be it online. And that's because I grew up seeing her do that. So think about budgeting as well. I'm not going to spend loads of time talking about savings and what we call financial resilience, purely because I know that right now that might be quite difficult for any of us to be doing. A lot of us are thinking, well, our costs are going up. I can't afford to save even if I wanted to. But I'm just going to touch on it very shortly here, just to say that having financial resilience and a buffer, a savings buffer, when you can afford to do that is something that's really important to have. Even if it's just starting off as really small amounts, small pot of money that you're saving each month. COVID has absolutely taught us the importance of that. Things can change very quickly, and we might need to think about how we boost and have that buffer. So think about that. It might not be the right time now, but what we can say is that the cost of living crisis, it won't be here forever. It might be here for a little while, but it won't be here forever. And when it is the right time to be able to start putting a bit of money aside, think about that. We've talked quite a bit about savings and the reasons why people don't talk about money. There's lots of reasons why we should, including these. One that I think is really important is about habits, whether that's for you or how you create good habits for you and the family to see and to learn from. That's why talking about money in that open way is really important. We spent a bit of time looking at what we can do to improve our own finances, those top tips. But what about if you're someone that's thinking, I need a bit more help than this? Or maybe you know someone that needs a bit of professional support with things like debt and money. So what's available? So I'm just going to spend a few minutes just looking at this for you. The first thing I can say is there's a lot available, and it doesn't have to cost you anything. There is free debt advice available. That's why we're here today, and to make sure that you've got access to that. Everything we do is available to anybody in the general public, whether that's you or someone else, and it's free. And you can get your level of options available. You can look at what your next steps are, how it works. All of this is available to you. So it might be that you need to get a bit of support from a professional. Why should you trust us? And how can you know that you're in a safe pair of hands? Well, first of all, we're regulated. We've been doing this a long time, for the last 30 years, in fact. And a lot of people use our service. 3,000 people a week come to us for debt support and help. So you're not on your own if you need some help. We also offer a full range of solutions and advice, so you can get everything you need in one place. And we get, people that tell us that we've helped them and we've really supported them. And we're also backed by government as well, which is really important. So Money and Pension Service is a government department as such, and they recommend us as well. There are many reasons why people might need debt support. So whatever the reason is, know that the help's there and to come and get it. Quite often, it's just a very simple change in life that just comes in and we need some help. Whether it's a job that changes, whether it's health, whether it's something like COVID-19, whether it's the cost of living, there is help out there. Find a way that works for you as well. There is lots of help available in different ways. Whether it's phone, we offer phone and digital advice at PayPlan. There are other organisations that offer face-to-face as well. And make sure that you know that when you get advice, first of all, it's free and confidential, but also you're going to speak to somebody who's going to be incredibly friendly and helpful to you. We want you to know that you don't need to be fearful of reaching out and getting that help. We will help you, whether that's understanding and exploring all of your options. Sometimes that might be an in-depth call with us or contact with us, or it might just be a one-off question that you have and you want that answering. We can offer that as well. And we'll guide and support you to understand all of your options and the advice that is right for you. And offering you lots of support to understand what you need from us, what's available to you, helping you to understand how to put together a household budget, and to look at ways to boost your income. And there's lots of ways that you can get this. We know that telephone advice isn't for everybody. That's why we've got lots of ways that you can work with us, either, for example, on email, WhatsApp, live chat, or just using our website itself. The other thing is that we know that having money worries and debts can have an impact to well-being. And I'm not going to go through all this piece of information with you on this screen. There's lots of information on here, but I'm just going to point out two key bits. First of all, the top bit, 85% you can see there. The majority of people that speak with us for the very first time, reaching out for help, will often say, having these debts has impacted my well-being. And that's understandable because it can be all-consuming, it can be very overwhelming. The bit that I really want you to focus on, though, is this second piece, which is the blue section. This is what can happen. This is what positive change can happen within a very quick amount of time once you've actually reached out and got help from us. 93% of people said that after they reached out, their well-being had improved, their stress levels had decreased. That's really important to recognise. That can happen in one phone call or one email. There's a really good reason to get help as quickly as you can. So how do you do it? Well, we're going to share all this with you anyway, but just to reach out and say, first of all, we've got our free phone number that can be accessed at any point. We're open from 8 in the morning until 8 in the evening, Monday to Friday. We're also open on a Saturday because we know not everybody can speak to us during the week. We're open on Saturday 9 till 3 as well. We're also available on the website. You've got a special one there, so www.payplan.com/care-first. You can access our help through that as well. They'll be circulated through to you. And when you land on that website, that's what you can see. So that you can recognise that, you'll know you're on the right website. Just to round off, in terms of last final thoughts, first of all, whatever you do, if you need some help, don't delay. Get some help as soon as you can. You'll start to feel much better as soon as you make that first contact. Do start talking. You'll feel better for doing that as well. Whether that's to, friends, family, partner, loved ones, get the conversation going. Whether you use us or not, make sure that you get free support. Don't pay to get help. Don't worry that just by reaching out and asking questions and getting advice is going to impact you. A lot of people worry that speaking to us will impact their credit file, credit score. That won't happen. First of all, our advice is free, it's confidential, but it's without any impact. Advice is just advice. Now, if you go into a different type of solution, a debt solution, that might impact you, but we'll talk you through exactly how that would impact you so you can make a decision that's right for you. But getting advice and exploring your options doesn't impact you at all, so you might as well do that. Do make sure that you talk to an expert as well when you're getting advice, come to the right place. And whatever you do, beyond anything, do something. Make sure you know what's there and do something. Following on from the session today, we will be sending you a lot of different resources. So you'll get a copy of the slides, but also you'll get a copy of the budget planner. We'll send you a few different versions of that. So you've got that. We'll also send you some useful resources for younger people. We know that over the last couple of weeks, it's been the first few weeks of university for most students. They'll probably be thinking about finances for the very first time. So there's a useful pack there. A pack for money coaching youngsters of a younger age than students, and then other resources as well we'll send to you. That's everything that I've got for you in terms of the slides, so hopefully that's been useful for you. So that's the end of the session in terms of content. I don't know if anybody has any questions for me. Feel free to ask anything that you want, and if anybody needs to go, we'll be following up afterwards in any case.
Cheers, Anthony. Thanks so much. That was a great session, and I just downloaded the Quidco app as well. Just
great.
Never used one before. I never knew they were out there, so yeah, I'll have a quick look at that as well later on today.
Yeah.
If anyone has any questions, please feel free to ask absolutely anything and everything whatsoever. I know there are a couple of things on here. So this came in quite early, so I didn't know if you answered this as you were going along. What is classed as serious debt? Yeah,
I think some people will sometimes think as well, serious debt or a serious debt problem is maybe when you owe lots of money. And that's not necessarily the case at all. We speak to some people that have hundreds of thousands of pounds that they owe and are struggling to repay. And then we have some people that only owe a couple of £100. The fact of the matter is, I guess it's the difference between manageable debt and unmanageable debt, as I said earlier. And unmanageable debt is recognizing when I can no longer maintain those payments and I need some support. And that doesn't matter about what the debt level is at all. It's just recognizing that I can't afford it. That's when you can reach out and look at what your options are. There's different repayment plans out there. There's different ways to look at partial debt write-off. Lots of different options. Everybody's different. There's one client we speak to, they might have a couple of options. So the next person we speak to, they might have 6 because everybody's different. So yeah, it's about recognizing when I'm struggling to repay. That might be what the indicator is.
Perfect. I don't know if you've answered it. I think you've answered this already, but somebody might not have caught it. So how do you get hold of a credit report? Just to go through that very quickly again, if that's okay.
Yeah, of course. So you've got 3 main credit reference agencies. You've got Experian, you've got Equifax and TransUnion. The easiest way would be to use one of the free apps. So Experian have their own, but then you also have ClearScore and you have Credit Karma. And if you sign up to those, and I recommend all 3, you're getting everything that's out there about you. Those apps are completely free. You get lots of information when you log on to those. and it tells you how to make improvements to your credit status as well.
Brilliant, thank you. And the next one is a question. I am on the electoral roll, but I have opted out of the open register.
Okay.
Will this still benefit my credit rating?
Yes, so it will still benefit your credit rating, because it's not giving you to general public, but that kind of information will still be known by credit reference agencies, so that'll still benefit you.
Brilliant. There aren't any other questions at the moment, but somebody has popped in there. Just wanted to say thanks so much for this, being so helpful, especially around stigmas concerning debt. So that's brilliant.
Good, I'm glad. And it doesn't need to be, you know, like I say, most of us will probably have a challenge at some point. Just know that we're there. You can reach out anytime confidentially.
Yeah, definitely. The one thing I noticed as well is because of the way the world is at the moment, Anthony, is that you know, myself and my wife are very lucky that we work and we're in okay jobs. But you know, over the last 6 months, we've felt pinch. There's been a definite change, you know, it's definitely had an impact on how we look at things and how we spend and things like that. We're a lot more careful now. We have to be. So even those people that are lucky enough that they're in a good position, you know, I've said this before on other webinars as well, where we talk about financial well-being. You're going to feel it as well as those individuals that aren't as lucky. So I think at the moment, the way the world is, everyone's impacted. Everyone.
100%. Yeah. You know, I talk about this day in, day out. I know how to do these things that I'm talking about, but even still, I still feel it. Absolutely.
Yeah.
I gave those examples earlier. You know, I live and breathe this stuff, but you can't help but not feel it, because it's impacting in lots of different ways at the minute.
Yeah, definitely. Well, there don't seem to be any more questions. Thank you everyone for attending. This is going to be recorded, so if you want to watch this back, the link that you use to register for the webinar, you can give it a couple of days. You can pop that into an address bar at the top of a web browser, and you can watch the recording back as well. So if you have colleagues or members of your team, or even family members or friends that you want to watch, you want them to watch this, then just pop that link back into an address bar at the top as well. You can watch this back and you can watch it all over again. You will have an email come to you in the next day or two, just asking how you found the webinar. You can reply to that webinar and ask for the slides and the pack that Anthony mentioned. So please do feel free to ask for that. If you could just pop into the subject heading as well that it was the PayPlan webinar that you watched. Sometimes people come through and just say, hey, can I have the slides? And I haven't got a clue, or the team don't know which webinar you attended. So thank you again. There's a couple more comments in there as well, saying thank you so much, and people that have downloaded the app. An informative and detailed session, really appreciate it. I hope you can all benefit from it. Brilliant. I hope you all have a great Monday. Thank you again, Anthony, and I hope you enjoy the rest of your week. Thank you all.
Thank you, everybody. Take care.